Bob, you've done some of the best work with respect to looking at Bitcoin as a risk asset, more correlated with, say, the Nasdaq and that side of the tech world versus, say, the traditional gold. Maybe you could talk to us about, that's obviously an evolving trait of Bitcoin, but where's the DNA of Bitcoin right now?
Yeah, I mean, I think one of the key questions for any allocator and really for any widespread investment adoption is someone has to sit there and understand where and how Bitcoin behaves relative to their overall asset portfolio. And I think that's one of the challenges of more wide scale adoption is, when does Bitcoin go up and when does it go down is pretty uncertain in terms of when you're thinking about it from an investment allocator's perspective. I think if anything, what we've seen an increase in the idiosyncrasy of the return related to Bitcoin. Whereas a couple years ago it basically looked like the Qs times 3 or something like that. The fact that we've seen the market action that we have and the magnitude of the market action connected to the spot Bitcoin ETF dynamics over the course of the last year have made it even more idiosyncratic. And so I think, if anything, while the Bitcoin issuance, the spot Bitcoin ETF issuance, has been very valuable in creating an infrastructure, it's been detrimental to understanding how the asset transacts, because it's made it more idiosyncratic in terms of its returns. And so my guess is over time, we'll sort of get back to something sort of more normal stability once the sort of initial flows that come from that play out. And I think even in to be honest with you, the last couple of weeks, it kind of feels that way a little bit, that we're kind of getting back to the norm. And if it ends up being primarily a different risk asset, well, that has a use in a portfolio, like in the same way the Qs have a use in your portfolio.
Of course, yeah.
But it isn't necessarily quite as attractive as gold from a diversifying perspective if it remains so correlated to tech, to like tech or risk assets.
I mean, as an example you're
Super
talking
helpful.
about, I'm thinking of the idiosyncratic nature of it lately is how with these geopolitical tensions, gold was going up, Bitcoin was going down.
Yeah.
That's not what you would expect if it's a store of value, right?
Well, I think many people have proposed that Bitcoin will protect will protect an investor against geopolitical risk. And I think the challenge with that thesis is it's not a fundamental thesis, it's an empirical thesis, in the sense of you have to observe how people respond when you see those circumstances emerge. And I think, if anything, actually, what we've seen is a bit of a step back along that dimension. If you go back, back to the Ukraine, the Russian invasion of Ukraine, Bitcoin did seem to trade a little bit positive to geopolitical risk, meaning as the risk was increasing, Bitcoin went up. And I think this more recent period, with the conflicts that have emerged in the Middle East, we've seen Bitcoin trade closer to a risk asset in the short term, and that certainly looks like it's moving further away from being that geopolitical risk hedge as its adoption has become more widespread.